A real estate investment trust is a trust fund that pools money from investors and uses the pool capital to buy, manage, and sell real estate assets such as residential or commercial buildings, retail or industrial lots, or other real estate-related assets such as shares in publicly traded property companies, listed or unlisted debt securities of property companies, and so on. It is a passive investment entity that buys and keeps income-producing real estate. REITs are generally powered by recurring rental income from real estate and will distribute its income in accordance with the common tax framework governing REITs, giving unit holders with stable and regular income. The goal of REITs is to generate appropriate investment returns. Total returns are provided by the rental revenue as well as any capital appreciation from holding the real estate assets over time. Following that, unit holders will receive their returns whether in the form of distribution or capital gains. The first REIT was established in the United States in 1960s, allowing investors to participate in large real estate properties. Axis REIT was the first Malaysian REIT to be established in 2004. Meanwhile, the Malaysian government, through the Securities Commission Malaysia (SC), released guidelines for Islamic real estate investment trusts in November 2005, establishing a new global benchmark for the development of this instrument and making Malaysia the first country to do so. The Sharia-compliant REITs is known as I-REIT. In comparison to traditional REITs, the income of I-REITs must be from Sharia-approved activities or, in the case of mixed operations, must adhere to the 20% standards established by the Sharia Advisory Council (SAC) of SC.
REITs in Malaysia are regulated by SC, which has issued a guideline on real estate investment trusts. Islamic REITs are regulated by the guideline for Islamic real estate investment trusts, which must be read together with the guidelines. While Islamic REITs operate in much the same way as conventional REITs, the former are required to abide by Sharia principles. In order to ensure that Sharia principles are observed, there is an additional party in the structure of an Islamic REIT, and to ensure that the operations and activity of the Islamic REIT comply with Sharia principle. As you can see, Islamic REIT work like any other trust funds and similar to conventional REIT, where it should have valuation, trustee property manager, management companies, and others. In addition, the Sharia Committee is appointed to act as an advisor pertaining on all Sharia-related matters in reviewing, monitoring, and approving investment by Islamic REIT as required under the Islamic REIT guidelines. The main criteria covered in the guideline include rental or real estate for business purposes, investment, deposit and financing, takaful, and schemes, and more. The regulatory framework is also similar for both, with the exception that Islamic REIT must comply with Sharia requirements. The investor invests in Islamic REIT through holding units. Then, Islamic REIT acquires real estates as a pool of assets. Manager manage the Islamic REIT and trustee act as the custodian of the fund. Meanwhile, Sharia Committee advise on matters pertaining Sharia, and lastly, tenants rents the real estates. I think that's all from me. I will pass to the next presenter.
Islamic REIT is a type of ethical investment. It is different from the conventional REIT framework because the Islamic REIT is closely related to the principles of Islam. This principle is also known as the principle of Islamic Sharia by investor. Principles of Islamic law prohibits any forms of business, activities, trade, service or exchange with unlawful activities. Conventional REIT has no constraint for its permissibility of activities performed by tenants as it does not follow Sharia compliance. Islamic REITs have a remarkable robustness during the global financial crisis (GFC) period, whereas Islamic REITs display better diversification benefit. The study, further extended by Rosman 2015 using extended time period from 2008 to 2014, found out that Islamic REITs outperform both share markets and bonds market. This indicates Islamic REITs are able to achieve a good performance with a longer time horizon. Furthermore, Razali and Singh 2015 examined the systematic risk of Islamic REITs versus conventional REITs in Malaysia. The study has found out that new Islamic REITs entry creates a significant risk reduction effect for the conventional REITs market. In other words, investment in Islamic REITs in Malaysia able to offer low risk as well as could protect Islamic REITs investor against stock market volatilities that could not be diversified away. An Islamic REIT is physically able to generate stable, sustainable income through rental income and capital appreciations, which can be used to continually pay regular dividends. Islamic REIT is also known for its affordability compared to the conventional REITs due to the additional interest. Islamic REITs allow investors to participate in the real estate market with a smaller capital outlay as compared to the outright purchase of real estate.
There are 4 I-REITs listed on Bursa Saham Malaysia, which are Al-Aqar Healthcare REIT, Axis REIT, KLCC REIT and Al-Salam REIT. Al-Aqar Healthcare REIT, previously known as Al-Aqar Capital REIT, listed on Bursa Malaysia Securities Berhad main market on 10 August 2006. Their fund is managed by Damansara REIT Manager Sendirian Berhad. Al-Aqar is the first Islamic REIT to be publicly listed in the world, the first Islamic healthcare REIT in Asia, and a model for the growth of Islamic REITs in Malaysia and the region. Al-Aqar has built a portfolio of 22 assets, including 17 hospitals and 3 wellness or health centers, 2 colleges, and 1 retirement village. Second, Axis REIT debuted on Bursa Securities on 3 August 2005 and on December 11, 2008, it was reclassified as an Islamic REIT. Their fund is managed by Axis REIT Managers Berhad. Their portfolio consists of office and industrial sectors. Its 61 properties, which are spread across the Klang Valley, Johor, Penang, Pahang, Negeri Sembilan and Kedah, make up a comprehensive portfolios. Third, KLCC REIT was created with the primary goal of owning and investing in Sharia-compliant property for use as office and retail space. The agreement dated on 2 April 2013 between the manager and Maybank Trustees Berhad has established the fund. The deed was submitted to the Securities Commission for registration on 9 April 2013, and on 9 May 2013, the fund was listed on the main board of Bursa Malaysia Securities Berhad. Fourth, As-Salam REIT. As-Salam REIT hit a major milestone when it was listed on Bursa Malaysia Securities Berhad main market on 29 September 2015. As-Salam REIT's portfolio has grown from 31 properties in 2015 to 54 properties across Malaysia, including 3 retail malls, 1 office building, 43 food and beverage restaurants, and 7 food and beverage non-restaurant assets. That's all for Sharia REIT. Furthermore, there are another 14 conventional REIT listed on Bursa Saham Malaysia, which consists of Sunway REIT, IGB REIT, YTL Hospitality REIT, M-First REIT, Pavilion REIT, Hektar REIT, KIP REIT, Amanah Raya REIT, UOA REIT, CapitaLand Malaysia Trust REIT, IGB Commercial REIT, Atrium REIT, Central REIT, and Tower REIT. In terms of return, unit holders of a REIT might receive returns in the form of income distribution based on the distribution policy mentioned in the REIT's deed, or capital gains which may emerge from appreciation of the REIT price. The unit holder get to know the performance of each REIT through distribution yield. Major daily newspapers typically reveal the yield in the business section. The formula used is income distribution paid to a REIT unit holder divided by REITs price paid by the unit holders or the prevailing market price of the REIT.
The transparency of Malaysian real estate market could help boost property investment in Malaysia, particularly in Islamic REIT market. After all, they have several differences between Islamic REITs versus conventional REITs. The differences we can see between the product or instrument that both of it offer, and also the pros and cons in choosing between those two instruments. Islamic REIT must adhere to Sharia law even though the function is very similarly to conventional REITs. An additional party, the Sharia Committee, is included in the structure of an Islamic REIT to ensure that Sharia principles are upheld. Its role is to offer guidance on Sharia-related issues and also to guarantee that the Islamic REIT activity and operation adhere to Sharia principles. Some activities are not allowed to operate, and products such as alcohol, tobacco, gambling, conventional bank, and others are banned. In addition, Islamic REITs can generate impressive profit for their investors through dividend distribution. The study on Islamic REITs should be expanded on a regular basis to provide investors with a better understanding of its Sharia-compliant markets and how it operates.